Years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to discuss already a ceasefire. So I guess those of us that doubted Trump found out again that he's done it one more time. And so they're going to call this probably the 12-day war. So tonight we'll talk about some of the setups and how fast things turn around. As I talked about last night, I thought we could see the market turn green, and it did indeed. Let's get into tonight's video. Well, welcome everyone. What a world we live in, huh? We went from war. I was pretty angry. I guess I was one of those that was angry about some of the actions over the weekend. And it looks like Khomeini has already folded the cards. And who knows, maybe the Israeli and Iran will be best friends, haha. But they did a little, said, hey, we're going to shoot some missiles at you so you can shoot them down. And then basically not a full surrender. I don't know where it goes from here, but within the next couple hours, supposedly there's going to be a ceasefire. We know how these things go. Markets seem to do pretty much a lot of things that I talked about last night where, you know, it looked to me that we could turn green about the time we're going. Also, last night when I was showing you I've got to figure out how to get these sheets in your guys' hands. I spent several hours earlier today working with somebody trying to fix this issue that we're having. And anyway, you got to have them in your hands so that you can get the signals when they are. There's actually a trade out tonight that's very similar to last night. I put them both on. As we were talking last night, I put on the first trade, which was buy around 90 or 92 and sell at 6,007, and then buy again at above 8 on a breakout. And a breakout trade worked perfect. Pretty amazing. So we'll go through some of that stuff. Like I said, if you haven't got the Substack, get it. It's kendallreport.substack.com. And while I'm on that, before I get into the commentary here, is how did you guys give me some comment? If you get the Substack, I put those links to the Claude reports in, so they're kind of live and they'll blink and if certain values are being hit or whatever. I'm working on my ultimate goal is to have live data coming into those sheets, and you can push a button and it just updates them because they are actually doing live analytics when I run these things. So, but let me know what you think if you like the links or you want the actual charts like I was doing them before. Let me just, I need 1 second here, folks. I apologize for that. I had something about to crash and burn over here. All right. So, yeah, so, you know, we've got to get those reports out to you folks. These things are really cool, especially when you start using them with stocks and other types of items out there. Let's talk about what the implications are here with a ceasefire, because if everything starts to calm down, all of a sudden, if Israel's they're not shooting Gaza, they're not shooting Iran, and they're not fighting, and we can get, then the focus can go on to Ukraine and maybe getting world peace. Trump is on his way overseas, I think, again. The guy's a maniac. I'll have to tell you, you know, I wasn't doubting him, but what I was seeing is that the I was disappointed that they went in there because I really thought they'd get a deal, and it looks like they probably will of some sort. And they got to destroy a bunch of stuff, so they got to use some toys. But when it comes to the markets, we just couldn't push them down last night. I actually made a couple extreme trades off of the open last night, and then by the time, like I said, we had those two trades that came in off the data sheets, and those were really good trades as well. As far as anything new coming on here, bear with me while I try to bring something up here. We've got tomorrow. The news we had come out today, existing home sales came in a little bit better, but tomorrow we have consumer confidence. They always, I don't see that as a big report, but it is out there, forecast at 99.5. Nothing really coming out. New home sales, we got a lot of home sales. It looks like maybe they're stabilizing. Some of the builders got kind of pushed around a little bit, but they're in a different business completely. And we did see the treasuries actually back up just a little bit again, as I was talking about last night. So we'll just have to continue to pay attention to some of these metrics that come out, but there's nothing really material coming out at this time. So just waiting. I was looking at the database. It still had a couple more things to update, so it's just about done. So as soon as we're done cooking that database up, we'll go through that. As far as anything else, I mean, I guess my head's kind of spinning over the last several days as we've just been watching this geopolitical stuff. And like I said, the markets, I talked about this last week, I talked about it in Substack, is markets don't care about these things. They don't care about the geopolitical stuff. I mean, I went all the way back to 1980, and none of them mattered except for the Gulf War, and there was about a 17% decline after that. And even 9/11, you name it. I mean, these things are 2-3 days. Here we're looking at the average is 14 days. I don't think this one, the technical is 12 days since this whole thing started. And the markets, are already starting to come back in. So it's interesting. I want to get to the sheets because I'm looking up at my trading screen here, and I just did some light buying in here off of the data sheets, even though we're already up 27 handles on the day. There's some interesting trade that's set up here out of the AI. So we'll talk a little bit about that. So let's go ahead. Looks like the database, I'm just looking over here, looks like it's finished. So let's go ahead and go through the database. I think we can get through things fairly quick tonight. It might be a little shorter video than we had last night, but let's see what we get into. And we'll take a look at the big reversal that happened in crude oil too. If you remember, and I'll point this out, last night's sheet that I put out was a bearish sheet. And, you think, hey, we got geopolitical, unrest going that, it's in the Middle East, in an oil country, and we got a bearish signal on crude oil. So, and it ended up to be very right. So let's go ahead and get into the database and take a look there. All right, so we are on the daily database here. We're at 69. So this is exactly what I was talking to you about, what I want to see. Even though the markets are starting to go climb back above into the 61 handle again. Of course, we do have that rollover premium in there. If we were on the old contract, we'd still be at 60.50 roughly. But from what we're looking at here, 69.40, we're seeing basically a rotation, slight negative. We've got 464 exits, and we've got like 500. So we're just kind of seeing some small attrition here, and we look down at the returns here. We're at a lot of these sectors on a short term are getting very close to maturity here, and typically what we'll see out of that is that we'll see a bit of a rotation. We'll see negative rotation on the numbers, but we'll stay above key metrics. 62, 58 on the short-term database is kind of our next kind of support zone, and it'll rotate there. Meanwhile, what we're seeing in the background is the longer-term trades are starting to come on. So we're seeing a bit of a underlying foundation being built, and that doesn't mean we're going to scream off to new highs. But the way that this thing is functioning right now, I did get filled at 04 here, and so I'll go through that trade here in a minute. But the reality is that what we see here is a rotation of the short term kind of led us into the traction on the intermediate. Now the intermediate will take over. Short term won't have as much day-to-day reflection of what's going on, as the weekly will start to come into more prominence, and you'll hear me talking about that the intermediate trends are now in control. We're not quite there on the indexes, but we are getting there on the database, and we need probably another week or two. And if that happens, then we're going to see maybe a slightly different configuration. I'm actually surprised that we were able to get ultimately above that 42% on the intermediate, but even more so to see 50 handle, 53 handle on this thing is pretty interesting. I'm going to try to bring something up here while we're talking. Let me just see if I can get that. I think I showed this to you last night, but while we're looking at this, let me just bring this up. All right. Yeah, so this is the data sheet. Let me get off screen so we can see this. But this is the dashboard. So what I've been working on, this is another project I've got working, is it does the analysis. I'm going to be adding to this top analysis here. I've just about got this done, but this is the sectors and the overview, just like we're looking at here at 53.28. These numbers down here are just showing us some of the key breakout levels and things that have happened. And I can actually change this to the last year, and it will, hang on, that is the last year, the last 6 months, and you'll see the metrics change down here below. And what this data sheet is telling us, this is going to ultimately, all the stuff that I talk to you about every night in the database is going to be on this sheet, and including there'll be commentary that gets generated from the AI that's we'll call it the virtual Bob AI. And then it goes through trading positions, and there's going to be there's other elements that are going to be coming out of this. So I've been putting the link to this in. Hang on, I'll get you to the right thing. Yeah, so there's definitely, sorry about that. These screens are all floating around on me, but there's definitely, when we start to look at some of these metrics here, they're going to be real helpful, and ultimately the plan is to have all this technology into your hands. This is, I kind of laughed when I started this, but somebody told me it was a 6-month project, and it looks like it's probably about that. I've got a couple of people helping me out in the background, and anyway, we're getting there. So let's go ahead while I have it on the screen. Let's go ahead and start getting through some of the technicals and looking at this, and we'll get into the trade that is kind of working right now on the screen. But the S&P just continues to move along the lines that I've been talking about. It's interesting because some of the negative rollover that we were expecting, and this happens all the time with the algos as we look out where my cursor is, have flattened out. There was a fairly pronounced move to the downside. There's a little bit more on the intermediate right now, but I think that's going to fade as well. But we're seeing some stabilization here, and we're just kind of looks like we're going to crawl around right into the first week of July or so, into the end of, I guess that'd be the end of next week, and we'll see what we look like there, see if we can get any updates or if we get any kind of momentum that is breaking out. My expectation yet, while we were able to rebound, what we've been doing is working the outside ranges, and so we actually got the market grid to turn up. You can see here the market grid's turned up. The red dots are kind of rolling for a few more days and then want to roll back in again. Basically, this goes through the thing I talk a lot about. There's no VIG in this thing. We're not able to get any upward momentum. You can see just looking at the forecast of the indicators, nothing's telling you there's nothing coming here. It looks like maybe into July, maybe, but it's just going to be a flat line. I still think, I know this is a broken record, I still think ultimately we pull back to the 200-day moving average in this pattern, and that will maybe happen into July, could even be August when that happens. But it just looks like we've got just this flat line going, and I guess we have a 12-day war. We got a couple little blips out of this thing, and it's interesting that the buy the dippers are still around. I've been telling you that trade's still there, and the dip right now is anything that looks like S3 or STX. You get down to those extreme values. If I just let me zoom in on that real quick. I mean, if you notice, we did go through this one day here. This was the Friday, I think, of the war news. May not be. That might have been, just look at how many days ago, 6-7 days ago. But we're staying within pretty much in the confines. If you get up to these RTX levels, 3 days later we're down to STX. So we're working the ranges, and that's primarily what is happening here. Is just we continue to just work within the ranges. If you recall, the number is about 12% of the time. Otherwise, one out of 10 sessions, you might challenge the extremes, STX, RTX, but you don't close beyond them very often. And so, you're going to get out of 100 bars, out of 100 trading days, you're going to get maybe somewhere between 8 and 12 days on that those happen. And when they get there and they'll happen, they're basically have went beyond the extreme, and they will correct themselves back into the range. So that's why when you get close below or close above RTX or close below STX, that you get sideways to up if it's an STX, and the inverse on the upside. So you've got 1 or 2 days where you're going to pull back into the range, and it's very predictable. There's I usually don't get into much talking quant talk with you folks, but one of the things that a term somewhat predictable, that means there are certain elements that happen that become almost highly predictable, that certain things are going to happen. And so in the end, it's all about probabilities and math. So when you start to get to these extremes, markets will correct themselves. Now, there's sometimes that there's an event that's so extreme that will carry through multiple days, but it's very unusual. And when we get that, we get one of these right above me here. This little volatility. You get these volatility blowups, right? And that was the 11% day. You don't get many 11% ranges in one day. So when you get that, you get the volatility bubble, and then everything has to normalize, and all these things happen. And one of the things that I have a lot of side projects, and for the most part, I'm around during the day, but I kind of work from right now to 2 or 3 in the morning, my time, which is West Coast time. So I put in my 10 hours a day starting now. I have one little break, and then I work most of the night. But the point is that a lot of trading that I see is around London Open and the first couple hours of London. The New York traders start coming in at around 3 a.m., which is the London opening, and then on. So you start to get some pretty decent liquidity. It's very good trading at that time of the day. I've always been somewhat jealous of my European friends because that's one of the best times of trading, in my opinion, during the day. Sometimes it's way too noisy within the U.S. session, but it's fine. It's a little bit different. So I kind of have my trading day is skewed at kind of right now. So, but the patterns that we continue to see, just kind of rolling. Like I said, I don't expect there could be an all-time new high here out of this pattern. I mean, we're not far away. We're what, 6107 in numbers. I think it's 6160 or 80. So we're not far away. I mean, we could do that in the next 10 minutes. But the reality is that even if we get there, we're going to get a rejection. There's not going to be any real reason for you to get excited from an economic or a viewpoint. There's just not going to be any stimulus that's going to come to us right now. I mean, if you just look at the metrics, the Fed can't help us. The Fed's out of the game. Everything's kind of completely normalized or neutralized, maybe is a better word, that we're just kind of in this range, and we're going to have a hard time getting out. And I'm not sure what's going to generate it. I still think we have some downside to deal with as we come into Q3 and 4. We're not far away. We're a couple weeks away from finishing Q2 here. So we can talk about maybe some second quarter window dressing and some things that might come in as well in the next several days. So I'll start focusing in on some of those elements as we come through. But the bottom line, not much there. So let's go ahead and let's bring up the daily sheet here. And it's interesting because we went from this corrective bounce yesterday. We're right here into 85 bullish. And you can see when I made this sheet, this is kind of blinking here. This is R1 broken 60.99. And the trade, I'll show you real quick. This is a trade I missed it because I just ran the sheet, but entry 6100 plus. So I got it in around 0450. I put this trade on, and let me just bring that up so you can see it a little better. It's the buy continuation, so it basically broke over R1. So R1 heading for R2, 61.24. I've actually got orders in at 22. I usually go a little bit under them, and got to stop at 60.90. I usually don't. I have other methods that I use rather than using stops all the time. But then there's this trade happened last night. We had a trade where it was 60 when we were live last night, and I was discussing this. We had a trade here at right at I think it was 59.90, 92. I put that trade on. The exit was 60.07, and then there was the same thing. Was an R2 breakout, and that, and one of the things that when I was developing this sheet, I was looking at, the migration between the. So those if you're new to the channel, there's a number we have the market grid, and market grid has basically R1, 2, 3, and then a RXT, which is the extreme projected for the day, and it's inverse on the downside, S1, 2, 3, and STX on the downside. And the interesting thing about those ranges is their trigger points. So if you break it, R1, it makes sense. R2 is your next objective. So all this sheet is doing is going, hey, this is an R2 breakout, here it is, and it sets it up. When you and I are looking at these things, sometimes we see it and we think it, but this is at least putting it into a form that we see it, and it makes it an actionable event versus just kind of looking at it. So last night, I think I figured out on one contract you had paid for like 3 years of the newsletter. So Kendall Report .substack.com. So where are we here on the PPMs real quick? The PPMs were at the moment we're 0.16, so we're coming back a little bit here on PPM 1. It's now in M value, which if you look down here is maintenance. That means that's trend phase maintenance to the upside, slight bid. Everything's in M. We were neutral across the board. So everything's come back in. We're very close to triggering on PPM 3 back into trend mode, which would be a 0.25 or greater. And then PPM 200 is neutral at the moment. So let's take a look at the range here. And you can see what's kind of cool about having this thing interactive here. You can see this is showing us the next objective on this trade right now. So it's telling us 61.24. It's right now 06.50. That's our next target for the range. It shows that it's triggered the 16.99 event, and so now here's current 61.10. So it's already went through that, but this is the ranges. So the target level is 24, and what's interesting above that is 48. So if I come back up here just a little bit, so we can get to the trade again, you'll see here that continuation trades up to 48. So that's putting us up right to this R3 number. And so, we'll see how this thing plays out. But yesterday was amazing. Actually, it was really good. And some of this stuff got triggered. The secondary trade got triggered last night after the London Open. So just see if there's anything else on here. No, that pretty much sets it up pretty good there. So so volatility's moderate, breakout, active breakout. So we'll see how far this thing carries out. All right, let's go ahead and go to NASDAQ here. Same pattern. Like I said, we were seeing a little bit more of a loss in momentum, and this is why when you're looking at the algos, they give you an idea of what to expect, and then you have to see if we get any follow through. And right now, what they're telling us is we're just going to stay along this upward slope here, probably into the end of the month, and we'll finish Q2, and maybe I'll talk about some potential window dressing and what maybe effect that will have. Bottom line is what we're seeing here is just a continuation of the pattern. The 40-day is your ultimate support. You see anything that looks like SMA 40 on the NASDAQ, you want to be a buyer there. That's going to be an absolute buy at that. There'll be a decent bounce, at least back to the moving averages. So, but there's really nothing there. It pretty has the same characteristics, same expectations as we just discussed in the S&P. Like I always tell you, they're cousins. They have a lot of the same family members. So let's go ahead and I usually talk about what we're going to cover each night, and I think what we'll do tonight, we'll keep it, we're 30 minutes right now. We'll just go through, we'll look at treasuries next, and we'll take a look at crude oil, because that's in the pattern. Then we'll do gold and Bitcoin. So I was telling you, I was mocking a little bit Paul Tudor Jones, and he was talking about interest rates going to go up. The scenario around this whole situation is that the war was going to go on. This is an elongated war, and we're going to be talking about this thing next year this time, like the Ukraine situation. And we're not. It doesn't look like anyway. Anything can still happen, of course. But if the ceasefire happens and everything kind of falls back in line, I don't know if you folks ever heard that story. I thought it was kind of interesting that I guess Trump was with the Taliban or somebody. This was back many years ago, and he showed a picture of the guy's house. He goes, if one American gets killed or injured, I will kill you. He actually told a guy that and gave him a picture of where he lives. And I think they have that on Khomeini. I think they will take him out. There'll definitely be a regime change. I'm not calling for that, but I'm saying I think they got some heavy duty stuff going. And so they're putting the leverage out there. The one thing that is happening here on the treasuries is we're down to the 200 again. And this has been a pretty good line to follow. And that 200 right now, if we look at that value, is 430. And we got to 429. Actually, that value is right now 429.53. So we went exactly to the 200, bounced a little bit. We should stay sandwiched between the 200 is rising in here, and somewhere just around 440, 4.45. And that's just going to be where we're going to just climb along this line. And this has been, even going back here into earlier in March, this was kind of where we went. We get this little spike down, and then we get this big giant reversal. But now, if you look at it as a whole, it's starting to collapse. Let me bring up the weekly chart just for a minute here, because that will give us a little bit of insight to what's going on here. And you can see that the range, the extreme range has been around 375 to around 4.75, and I would be willing, if I put a medium line down the middle, it probably comes in right at 440. So 440 is kind of the pivot where we're just waffling back and forth. That's where this thing normalizes. Yeah, if you took that mid-range there, I bet it's exactly 440 or 441. So we're just waffling and oscillating across that line, and that's where the stability is. And a lot of times people get too, when you're looking at treasuries and looking at yield curves and looking at interest rate activity, you have to understand this market is gigantic. Okay, we have a $34 trillion deficit, right? So we've got a lot of debt, and this thing moves. It's next to currency, it's the biggest market out there. So when you're looking at the valuation and how these things work, they really get range bound for a while. And this has always been this way. You get spikes and they come right back into that normalization range. And right now, I'm telling you that number's, at an extreme at 395 to 450 is that range, and probably right 435, 440 is right where we're just going to hang around with a little bit above and below, and it's not going to change much. And it's funny listening to people that they think if the Fed lowers the short-term rates that it's going to affect the back-end rates, and it's not going to. I've been telling you folks for a year plus, I don't even know how long, that the the back end of the curve is going to stay around 4.25. That's just it. It's going to be there. The front end of the curve needs to be 3.25, maybe even 3%. So it needs to be adjusted down, but it's not going to change the back end of the curve. And it's going to stay there. And like I said, I believe last night I said this, is that if you look at the average yield going back 30, maybe 35 years, it's probably 6% on the 10. So we're already kind of a positive mode from where the economy has operated before. Most people think you got to have 2% rate to run the economy, and you don't. We just have a different cost, and unfortunately, through the debasing of the dollar and the purchasing price of the dollar going to crap over the years, then we've got this, everything's so inflated. Like I said, probably the only thing that hasn't inflated is LCD TVs, right? I was at Best Buy the other day, and they had a 98-inch TV for $2,400. So I remember I bought a 42-inch for $1,200, $1,400 back in the day, right? Back in 2005 or 6 or something. So anyway, but this is how this thing should stay set up here as we go forward through the economy, through the summer, through coming into Q3. But even then, and I'll do it. I think the next meeting is there. I think there might be a July meeting for the Fed, and then I think it skips and we go to September or October. I think it's September. Anyway, regardless of that, the Fed doesn't have any. Not that they don't have control, but they're not going to be able to change the back end of the market. They know that. That's why they didn't do anything in this last meeting. There was nothing to do. We're going to get PCE on Friday. There's nothing there that's going to blow up and surprise inflation. There was some speculation. I addressed it because it was in front of us. Is that, if crude oil were to break above 80 is my number there, then that would happen. So let's go ahead. That's a good segue right into crude here. So this is weekly. This is perfect. Let me just bring this up so we can see this chart. Look at this range that we got last night. We got a range. This is for the week. 78.40, 64.38. We're at 65. We're at the bottom of this thing, and this we also have something else that's happened. We've got that volatility bubble that I was talking about. So that's where the market grid spreads out really wide. What do we have to do now? We have to normalize. We have to squeeze that volatility down. This is going to take multiple weeks. You're probably looking at the range. When you get a big bar like this, they tend to define the range, and we'll start to get some inside bars, and we'll pop back in probably above the 40 period moving average, which is let me just get these numbers up here. 68 is the 40. Yeah, you're probably looking at bouncing around between the 60 and 80. If you remember, we were looking at the algos were suggesting just last night, before this big reversal, that we were going to stay positive. Look at what happened overnight. We went from a plus 1.9 all the way down to 0.39 with this reversal. And we also have, the interesting thing is here, I saw something where Trump was calling all these guys like, don't take advantage of this, start raising oil prices, keep oil prices down. It's kind of interesting. He's like playing the chess match again. But this big range it's an outside reversal bar. So this is something we need to watch going forward, is if we close roughly, if we close below, we'll call 71 on Friday, then that's going to give us an outside reversal. that's going to tell you that we're probably going to come all the way back into this range. 61, 64, 61 is going to will be where we go. But for now, we have the outside bar. Since this is weekly, we've got the downside of the market grid at 65, 62. So we're probably 68, 69. We can bounce back. Maybe there's some noise that comes out of here. If the ceasefire comes off, which is about to happen theoretically any minute right now, if that comes off and it's maintained and there's no breaches of the agreement, then we're probably going to be 65, 68, maybe print a 70. And so that'll be your trading range from that. But from a standpoint of it triggering some kind of inflationary shock wave, that doesn't look like it's possible. It felt like it was last night. And as I stated last night, I thought that we'd already started reversal. We were up over, I think, 6 or 7% when we came live last night. We were up around 4 something, and I think by the time we finished, we were only up 1.5. And of course, we ended up down. Let's go over to the daily real quick. I think it was almost down 7% on the session. Yeah, so this is even more. We get an outside bar. Not only did we get an outside bar on a daily, we get an outside bar from the last week. We just were looking at the weekly, but the last 5 days. So we closed lower today. We're going to get 2 more days down potentially. So it's going to get interesting. Look at the algos, all turned south. Everything has turned south on this thing. So all those expectations went away very, very quickly, as they should have, especially with theoretical ceasefire in place. I don't think there's much here. We'll touch on gold and then we'll go on. Gold just this is the daily, kind of in a flat range. Looks like it wants to come up and rebound. We've stayed within the Fibonacci targets that have been out there for the last couple of weeks, almost last 3 weeks. And so we're really locked in a range here. I'll just go over to a weekly very quickly to give you some perspective. Yeah, so this has been this. I just want to bring this pattern up so you can see this has just been this sawtooth formation. So we're still trying to, on a weekly, trying to squeeze it down to normalize this value. And then at that stage, everything on a weekly basis, this is a bull trend. It's not going anywhere. This is consolidation is probably a wave 4. There's at least one more high. And we've got a couple Fibonacci targets above right now, which are, let me blow this up so you can see it over on the side over here. You're looking at high target. We already satisfied 33.46, 36.54, 38.44 are those targets on the upside that are still up there. And this trend isn't going away for a while. I've shown you this before. Let me zoom in. You'll see it's pretty much a parabolic trend that's being forecast. And this goes back to 24, and it just looks like we're going to continue on the upside here. Maybe it flattens out, but this is the best. And I told you that if you see anything that looks like a 10-week moving average, that's still your buy point. And what I suspect, if we end up to close flat to higher this week, we'll probably see the market grid turn up, and maybe we can start a new channel to the upside. But this intermediate trend, and if I might as well go there since we're talking about it. If we come over here, you'll see this is truly a parabolic curve that we're seeing here. And it's still, on a monthly basis, you're looking at 3,800 plus, probably heading for 4,000, right? So you can see this formation. This is probably a 1-2, and what we're trying to set up here is maybe a mini 4, and then another move to the upside, which would be probably 26 sometime. Yeah. So yeah, just to give you a perspective, I'll show you This is 27 here. So, and so that's what 3,800. So, we're looking at this bull trend in gold. This is a good place to continue to hold value. It looks like it's extreme, but there's a lot more to this thing. It's not going away anytime soon. All right, let's do Bitcoin. I'll just stay here at this monthly. Gold has a much cleaner pattern than Bitcoin. Bitcoin hasn't been around that long, so for these monthly, but we do haven't shown this chart for a while since we've got it up here. We've hit fib target 2 on Bitcoin, which was 105.16, and that was forecasted when let me zoom in a little bit here. This was forecasted in May of 23 when Bitcoin was 25. The targets were 80,000, 105, and 120. So we're still a little shy of that 120 target. And I'm going to come back and we'll do kind of a long-term quick dive here. We'll come to a weekly. Weekly is what it's telling us is we probably have a fair amount of sideways chop to go in here. And you're going to look at maybe another attempt at new highs. There are some upward objectives here as well. I've shown you this as well. So I'm at risk of sounding like Tom Lee. I'll go ahead and cover this. But the range is 134 is this first fib target. 157 is the second, and then 175. But this is the thing I tell you about these. What you want to see forecasting is some kind of bull expansion from the PPMs, and we're not getting confirmation of that. So more likely what we end up doing is staying, maybe we hit we make another new high. It's possible for us maybe to go to 121 to 135. I've been telling you that number for a while, but more and more it's looking like we're really going to end up just chopping sideways, and that could stay in place for the balance of the year. I'm not sure everybody's going to get satisfied. It's going to be, crazy numbers, 200,000 by year end. It's June, it's midpoint, right? So it's halfway. So there's certainly a lot ahead of us and things that happen, but this is a risk-on asset. Okay, so let's. I'll come up and we'll put a summary on today. And I'll look at a couple of responses, see if anything's out there. So so this is a risk-on asset. So if we would need a bull market in stocks, everything, all the risk-on assets would have to go in. Bitcoin's not going to run on its own. I don't know what it would do that for. It's possible. It's hard to determine what fundamentally what really drives it. But there's nothing that I'm aware of. If it's a risk-on asset, then it's going to act like and be correlated to those other risk-on assets. And we're not seeing a forecast for anything like that. So probably sideways, choppy, maybe a new high, rejection back into the range. That's about all you're going to get here. So the good news, if you're trading it, it's good. If you're a holder, you're just holding. It doesn't matter to you anyway. You don't really care about any of this stuff. That's okay. But the bottom line, from a trading viewpoint and trending viewpoint, it looks like it's got some, not so much a correction in prices, but a correction in the momentum. And we definitely got this new high, got all kinds of divergences, and everything that could go wrong with the rally actually went wrong with this move to 112. And it doesn't mean it's bearish. It just means it's not the time for the big next parabolic curve. Now, this could be setting up a little mini wave too, and things could change, and they will. Okay, so we'll cover that. Let me look at some of the comments that you folks got out there, and then we'll kind of go on. Yeah, Chi-Town Tony, on the 5-minute, 15-minute charts, I typically use 5 and 1 hour. I find that the 15-minute it gives you some weird influences. It does me anyway, as far as, that trend. I'd rather know if they're play into an hourly trend. It's sort of like playing out, that's the next increment. I know some people use a 4-hour chart. You can do whatever, but I would go a little bit longer and then use the 5-minute for entries. But I'm a scalper, so I'm looking at this trades at 107 just printed. It actually was almost up to 111 a few minutes ago, so it was doing pretty good. Like I said, the 24 is the exit on here. Let me see what else you guys got out there. Yeah, thanks, Bo, for that help. Somebody was asking about the red dots. Yeah, I was using 1, and I found 3 to much be better. Yeah, Bo, I wish I'd have saw that. Tomorrow night I'll go through the Russell. Just remind me early on, and we'll go through that. It's not about liking the Russell's not going to change. I know folks want it to change, but it's not going to change until the yield curve changes. And as long as the yield curve's flat, it's no mas. It's not going to happen. Not that it can't rally up, but the big giant move is not there. Yeah, Mike Jock, I need to hook up and talk to you on the Discord. And somebody last night was asking about the Discord. The Discord is a private channel for those that have bought the indicators, and I'm hoping possibly soon to be able to get a little more active over there, like I was not that long ago. Yeah, I would not, let's see, go to Kendall, somebody was wondering about the Alex trades, go to kendallreport.com/indicators, and you can put a 24 at the end. That's a much better address. That ClickFunnels address I don't think works. Might, but I don't think so. I don't know if you're talking, if that was for the indicators, yeah. Yeah. Let's see here. Anything else is out there? All right, you guys are. What time we got? We got time. Hang on. We're gonna. Let me look at something real quick, okay? Bear with me a sec. All right, I'm going to bring screen back up, okay? We're going to do the Russell. You guys are being wait. This thing's a dog. It's about to die again. I don't know why everybody's so intrigued about the Russell. It's literally. Let me explain why this thing's not going anywhere. It's got a lot of regional banks in it. It's got a lot of crud in it. There's some good stocks. I have a WaveTech portfolio I put together that's pretty good, that has done that. It needs to be updated. But you can see this is weekly. It's right at ranges. It's just doing a rebound rally. It wants, people are starting to predict it's going to go. Why? And the answer is there's no reason. There aren't any stocks in here that are going to make money in this economy the way it is right now. 26 maybe. Yield curve needs to be a three handle in the front and a four handle, not above 470, and the back end. And at that stage, you'll have these companies that are in there will actually, because there's a lot of regional and smaller banks in there, they need that spread in the yield curve to make it work. Until then, it's going to be what it's been. We hardly can get our nose above the 200, and the 200 is kind of flat and curving down. So the trends. Let's see if this is the futures I've got up here, but so you can even see more pronounced here. It's just not going anywhere. I hate to be so disappointed on that, but I know you want to hear a different story. My name is not Tom Lee, okay? So let me come back up. Okay, so I covered it, okay? The reason why guys like Tom Lee and even like I had talked about before, but when you look at the markets, when you get to these really extreme markets, typically what happens is you get a rotation to the small caps, and that's the last phase of a bull market, typically, when that happens. So you'll get all this money flowing into the large caps, and then people start going, hey, what's cheap? And that's how the markets used to work. The structure of the markets and the structure of the companies within these indices have changed a lot over the years, primarily because of the zero rates that we had for a long time. And that just destroyed. I mean, if you look at the spreads, the Russell versus whatever, NASDAQ, it's horrendous. I think I have one set up in TradeStation. I have that screen I used to show you folks. Maybe we'll go through a deeper dive, but this index is, don't get your hopes up. There could be a short term a little bit more, but it's just got too many issues. And like I've told you for a year and a half, 2 years, is when the yield curve gets in a steepener, and it's got at least $1.50 between 3 and 4.5 on the yield curve. Then you've got an environment that index can work. Until then, it's just more of the same. So anyway. Yeah, so Mike, you're saying there's no fib projections on tonight's high so far, and for shorts. I'm not sure I understand that. Let's see what else we got here. Yeah, Chi-Town Tony, hopefully I answered your question. I just have to say, it's not that I don't care for the Russell. It's just not worth caring about. There's better things to do with your money. Yeah, and I see way up. Somebody's asked the Russians how the Ukrainians, how those ceasefires work. Yeah, different players. Maybe it's better, maybe not. That's why I said yeah. Let's see if there. I think that's probably about it, folks. I'm just scanning through a bunch of these. Yeah, So Alex trades, yes. 10, 21, 40, 200, good for any time frame, yes. I'll discuss that here real quick. The reason why that 10, 21, 40, 200, the reason primarily 102140 were selected is WaveTech is actually a system of rules around using moving averages to do Elliott wave, and that was the original theory back in roughly 84, 85 when we started developing and using the ppms and strength to characterize and give more character to the wave characteristics that you would get in wave 3s and 2s and 4s and all that. So we spent a lot of time. There's a probability map that we built during that time I've shown on the channel. If you get to Substack, trying to think, I think there is pinned to the top, there's a couple things. One of them I think is discussing there is a document there at the top that you can get. It's like, I don't know, like 15 pages. It's a big manual, but there's a section in there talking about the angle of attack and what all this means. And it was really about developing a probability of when the trend was going to continue, when the markets were likely to bounce off of their moving averages, all that kind of stuff. There's a big discussion. There should be several articles that I've written in there that cover this, and I'm about to do a bit of a video once I get these sheets ready to go out on how to use the sheets and what's broken down, kind of the behind the scenes in those data sheets. And, so anyway, all right, folks, that's going to do it. I managed to get to an hour going through that. Appreciate everybody participating. Hopefully I answered most of the questions that you guys had out there. So we will talk to you tomorrow at the same time. See you then.